Hi, everyone. We will get started in just a minute. Thanks for joining. Hi, everyone, and welcome. My name is Caroline Griffin. I am Events and Operations Manager for Riot. I am super excited to introduce Varun Sadana, Vice President of the Launch Place. The Launch Place has been a longtime supporter of Riot, and we are extremely thankful for their support and super excited to have Varun here with us today, who's going to talk about how to get investments, especially in this crazy time that we have all been through in 2020. But without further ado, I know you are all here to see Varun, not me. So thank you, Varun. I will let you take it away.
Thank you, Caroline. Can you all hear me okay?
We can hear you loud and clear. Thanks, Varun.
All right, thank you. Thank you, Caroline. Appreciate it. As she mentioned, we are a big fan of Riot. We have been partners for longest time now, since the Riot organization started. And we love hardware technology, software technologies. And since they have grown and started the accelerator program, we definitely evaluate companies that are coming out of the RAP program. In fact, and I'll talk about our portfolio, but in fact, we have invested in some of those companies as well. Good afternoon, everybody. My name is Varun Sadana. I'm the Vice President of the Launch Place. I've been with the organization, just to give you a quick background about myself. I've been with the Launch Place for almost 15 years now. Since early days of us, when we were a consulting organization, to when we launched our investment funds to where we are right now. So I've been part of the organization since then. I do have a few slides here, so I'm going to walk you through those. The way I have broken down my agenda for today is in three things. I'll take the opportunity to introduce the Launch Place to everybody, share the impact of COVID on investors. I do have some data that I'll present, and then share some, how to get connected to investors, some of my perspective and the Launch Place perspective on it. So with further ado, I'll just get going. And it seems like we may have a small crowd here, so I will give opportunities after all those three sections. I'll give opportunity to anybody who has questions. Feel free to throw at me, and I'll try to answer as we go along. I will assume that if we were meeting in person, I typically like to ask the audience if they know about the Launch Place or not. And I do hope just to understand how we are doing with marketing and our PR. But just to give you some background about us, we started in 2004 based on industry demand from small businesses in Southern Virginia. We started with partnership with Virginia Tech. There was a local organization in Blacksburg, Virginia, which was providing consulting services to small to medium-sized businesses. And at that time, there was demand in Southern Virginia. So Southern Virginia is a little different than other parts of Virginia, Northern Virginia or Blacksburg area. That area saw after 2000, late 90s, early 2000, there was a lot of restructuring, and historically, the Southern Virginia depended a lot on traditional industries such as tobacco, textile, furniture. And after there was restructuring and decline of those industry, there was a need for small businesses to provide consulting services that was not available. So with that demand in mind, we started the Launch Place, and we were helping small to medium-sized businesses. In 2013, so during that time frame, from 2004 till 2008, we were working with small businesses. We never had a fund to invest, but at 2008, 2007 onwards, we started seeing a lot of startups come to us, and we were helping them do their business planning and possibly take them to investor friends of ours outside of our area. And I'm sorry, I'm looking at chat in between. We started working with some of those early stage companies, but we never had a fund to invest. So in 2008, 2007, 8, we thought about maybe having a loosey-goosey angel network in our region, but that was the worst time to raise capital. As you all can recall, 2007, 8 was a great recession, and that never happened. So we tabled that idea of having an investment fund or a network in our area. But during that time, we were super busy with our consulting, because a lot of small businesses were not doing that well. During the same time, the regional foundation, which is a private foundation, Denver Regional Foundation in Southern Virginia, they approached us to see like if we can. They adopted a goal of economic development, and they approached that if we can propose them with a plan, so that can help entrepreneurs in the region. So this was almost like 12 to 15 months of process. We presented them with a plan, and we raised a $10 million in 2013, and they were the they were the only investor in that fund. And since then, we 2013 onwards, we diversified our service offering from just purely consulting to starting funds. So we started pre-seed and seed fund 2, pre-seed and seed fund 1. And when we raised our second fund in $11 million in 2018, we started with a pre-seed 2 and seed fund 2. So initially, we just increased our capacity from purely consulting to investments. We also have some small office space for portfolio companies. And our headquarters is in Danville, so this was like classic consulting services that we were providing, from business planning, market research, financial modeling to organization assessment. This was just purely consulting. And since then, we have, like I said, we have grown from just consulting. We now have an office in Research Triangle Park. We are located at First Flight Venture Center. The funds, and we can, in between the two funds, we can invest anywhere from 20,000 to 500,000. And I'll talk a little bit about both of those funds. We still provide one-on-one advisory services to not only portfolio companies, but also other startups and entrepreneurs. If you are a portfolio company of ours, then there is a mentorship and training and coaching available. And we also do some workshops, not only for our portfolio company, but for other entrepreneurs as well. And some of them are coming up, and hopefully, sorry, this is a shameless plug here, but there is going to be one that we are with the SPTDC. We are launching investor ready workshop, which is going to be December, and I hope you all can consider that. Then we also have a network of executives. So if our portfolio companies require some kind of help and services, we can connect them. And I already talked about free office space for our portfolio companies. Talking about our funds, so the two funds, the pre-seed, we can invest anywhere from $20,000 to $75,000, and seed fund we can invest from $100,000 up to $500,000. The intent of these funds is that they become an evergreen fund. Since we are a venture development organization, when we have a return, the goal is that the return goes back. We had an exit a couple of years back, and it goes back in the fund. It's not a typical fund model where we distribute it to LPs and fund managers. They get some. We return the fund capital back to the fund. We also offer bridge financing if it is needed for portfolio. Pre-seed investment. So we established this. This is interesting that we launched pre-seed after our seed fund. We were seeing a lot of good companies. So the way we have structured our seed fund is we have an advisory board that the companies come and present. And we were seeing a lot of companies were coming to us, but they were a little risky for, say, an investment of $250,000. But we liked the entrepreneur, we liked what they were doing, but unfortunately, we could not invest because of the fact that our investment thesis was more towards a little bit more companies that were further along. So it's kind of you lose those investment opportunities. So we decided to launch this pre-seed investment program in 2014. The committee consists of some of the experts in the field, investors, successful entrepreneurs who are part of that committee. We try with the pre-seed. We try to do it quick compared to the seed fund. The due diligence is, we call it due diligence light on it because the investment dollar is light, but we can do it note or equity. And if a company is successful, the way we have the seed fund is, in theory, it is for $25,000 for product and market validation and $50,000 that investment goes towards a business model, refining the business model. Usually it is in tranches. Sometime it is in two tranches, but mostly we have seen it is in, we will do three tranches. And if a company is successful in meeting all those milestones, say we invest $20,000 in a company, we lay down like 2 or 3 milestones for them. And if they are successful in meeting those milestones, then we will go ahead and release the next tranche. And if they are successful in meeting all those milestones that we cite for a pre-seed, then the company has opportunity to come and present to our seed fund. And again, that's an independent decision. A company doesn't have to go through pre-seed fund to receive seed fund, but we're kind of stacking the capital here, pre-seed fund and then seed fund. So we can invest anywhere from 20,000 to 75 and from pre-seed and then move on to our seed fund. Our seed fund is, again, we have board of director, advisory board, which represent some of the other fund managers in North Carolina, Virginia, or they represent other angel group or our successful entrepreneurs. The average size of our investment first check is usually $250,000. It doesn't have to be. We can invest anywhere from 100 to 215 the first check, and then we keep like equal amount of dry powder, so we will go up to $500,000 in a company. But between the if a company is going through pre-seed fund and then seed fund, then we can do a little bit more than 500,000. We typically syndicate the deals with our some of the local partners, but also some of the Southeast partners, some of the groups in Southeast, and also nationally. We can do convertible note equity, but most of the investors, especially in seed and later, they prefer equity investment. And we have follow-on investment in gap bridge financing available to portfolio companies. For seed fund, one of the most important thing to consider is, since we are a venture development organization, we are looking for economic impact. So we kind of a double bottom line fund. Basically, what that means is that any company that we invest in, we are not only looking for return on our capital, but also looking for economic impact in our region, which is Danville, Virginia, Danville, Virginia, Pittsylvania County, Virginia, and Caswell County, North Carolina. So we are right at the border. So in our region, we also include North Carolina. And how we are quantifying that impact is the 5 jobs over a period of 3 years. That's the minimum that we request or ask. But the more a company can suggest they will create and promise, then the better it is when we are evaluating a company. For example, we invested in a company in 2015, I believe early part of 2015. And now they, after like 5 years, it does take time, as you can imagine. They are opening a manufacturing facility in our area, possibly create 75 to 100 jobs. our process, it's this is on a high level. This is the process. What you start with an interview, which is first introductory call. The companies have to fill out an application online, which is through a Procedure platform, and then we go through due diligence. And this can take some time, depending on the stage of the company, how far they are. If their documents are set and they have a deal room, this can take 60 to 90 days. First due diligence is we do a fairly light due diligence just to make sure that they meet our high level requirements, they match our investment thesis, and then there are no red flags. And then after that, here the company present to our advisory committee, what we call it SWA, which is Seed Fund Advisory Board. And then here there is a vote. And if the company is voted to go into due diligence, then we do a deep dive due diligence, which can take 60 to 90 days, and then we issue a term sheet. I don't know if I mentioned before, but our focus is focus industry. Typically, I would say we are fairly agnostic in terms of industry, but we know what there are industry that we are not going to invest in. Usually, that requires some substantial capital, something like pharma. But we are okay looking at software, hardware, IoT products, health tech, education tech, advanced manufacturing, and clean energy. To give you a background, here's our investment portfolio. We right now we have a total of 20 portfolio companies, and again, there's some of them are. I'm sure you can recognize the logo, Vital Flow. They were actually one of the companies that was. I think they went through the RAP program, accelerator program, and Revive is also one of those companies. So you can see a diverse portfolio from cell separation technology to IoT, and we do have one company that is more of a CPG product, but that was the idea was to diversify our portfolio. We do sometimes see CPG companies, but that's not like truly our focus. But we will give them a consider it if we can see that they can promise our impact, but also if it meets our investment thesis in terms of return. Again, this is some bragging rights for us. We were considered one of the active angel groups by Halo report, which is by Angel and Resource Institute a couple of years back. Other than consulting, we also call ourselves like ecosystem builders, so entrepreneurial ecosystem builders. So we're not only investing and hey, we'll see you at the board meeting, or just send us your quarterly reports. We participate in a lot of, we host some of the local events. The two things I wanted to mention was the Big Launch Challenge and the Idea Fest. Those are our two pitch competition. Idea Fest is we will usually have over 120 applications. We'll have 20 companies come and present and in front of investors and judges. There is a prize money associated with it. Typically, we do this in spring, end of March, early April. Big Launch Challenge is the other one, larger pitch competition that we do it in fall, usually in November. And there is a higher prize money and the companies are further along. So last year we had a prize money of 20,000. And I will talk a little bit about the Big Launch Challenge that because of COVID, when we talk about impact of COVID and some of our strategies, that this was changed. We modified Big Launch Challenge a little bit this year. So this was the first part, was about the launch plays. Any questions for me?
Varun, I'm not seeing any questions. If anybody has any questions, just a reminder, you can place those in the group chat box, or feel free to unmute yourself and ask if you're comfortable. Thank you.
All right, so I'll just continue with it, and we can always take questions at the end too. So, one of the things I wanted to talk about was impact of COVID-19, and not only on companies, but also we have seen that it has been on investors as well. So I would say here's the chart that I got from PitchBook, which collects a lot of private investment data from angel groups, seed fund, VC funds, and with the National Venture Capital Association, they do surveys and collect information about private investments. And this chart is the latest one and includes some of the Q3 data. So this includes data for 2020 until September. So overall, you will see based on this chart, this is very high level, that overall VC industry has been very resilient to thus far in 2020. You can see the investment dollars of 37.8 billion, almost $38 billion in 2000 Q3 has almost been consistent with Q3 2019. And the number of deals that have been completed has also been steady. If you look at here and compare it to 2013 numbers. And I don't want to create a false expectation, but I do want to mention part of it is also because of some of the larger later stage companies and larger deals that have been happening. These are the companies that have gone on to raise like millions of dollars and they become a unicorn. So, that is also a factor that drives a lot of this, at least the investment amount, the companies that we see in news and we celebrate, which is great. That gives a lot of credibility to the industry. But I want to be very clear about that fact. So with that, overall, the VC industry has been resilient. But I do want to mention that it doesn't give you an entire picture. So if we look at especially in the stage of the companies where we are operating, which is angel investment, seed investment, and a little bit nowadays there is an overlap of, if you call it the definition of between like seed and angel and Series A. Sometimes there is an overlap. But the data suggests again from PitchBook that not entire industry had the same impact. Clearly from this chart, you can see that the angel and seed capital shows us did see a slowdown early on in Q2 and Q3. You look at this Q2 numbers and Q3, you can clearly see the investment activity kind of decline in Q2 and Q3 2020 compared to same time last year. So again, the overall industry was resilient, but we saw some impact in angel and seed stage companies. Again, this chart continuing to show the impact on angel investment, both dollar amount and the number of deals that happened in 2020. This is just so far. It doesn't, of course, it doesn't include entire 2020, but it has decreased compared to the same time frame. One of the things this chart also showed that compared to angel versus seed, angels are still investing, and I will also show some graphs that just came out of ACA, which is Angel Capital Association. We are members of it, and they keep track of most of the angel groups and networks in the country. And based on their survey, we are still seeing that angels are still investing, but there has been some, overall there has been some decline. At least it was in the early part of Q2, which is April onwards, and Q3. So this just summarizes the, overall, there was decline. Lot of time investments is based on sentiment, and like everybody, end of March, early April, there was a lot of uncertainty. Nobody knew about COVID. We still don't have a vaccine, but early on there was nobody was sure about like how to prepare for this. But now I would say most of the investors have adjusted and adapted to this remote way of doing business. They have, if they have to, they have redone their investment thesis and redone the calculation for their return. So one of the things I showed you the overall industry for VC, which was I'm saying like, hey, it has been resilient. There has been early impact of COVID on angel and seed. But if you look at this is, I encourage you all to look at this angel founders report that came out yesterday, ACA at their angel forum. And what this says is that they have done a survey, which they did it in early April. We were part of it too, and a lot of groups that you recognize in the area, TP Capital, Venture South. They are also part of it. Atlanta Tech, a lot of these funds. Um, um, they participated. I don't know if they individually participated, but they are members of ACA. And what this shows is the survey is that April, so this darker green is the April survey result, and this one is the latest September, that there was some hesitation among angel investors, especially early on in April, but things have improved. 60% estimate the investment dollar will be same or grow compared to what they were suggesting in April. So again, the sentiments are important here. And as you can see, they are interested in participating in more deals in future, and now or in future. COVID impact, again, Q3. This is another chart from the report, ACA's report, that investments in new deals is continue to increase. That's what they are saying, that we will participate, and this is important, especially for young companies who will be raising first private capital from private investors after friends and family, that they continue to they will continue to invest. Look at here. Here it shows like angel investors, their members and groups. They said like only 2% will show like increase in deal activity in April versus 19% in September. Again, this is a survey done, shows sentiment, but that is very important. If angels, they're thinking that the industry's grow, they will continue to invest in early stage companies. And I highly encourage you. And what I can do is I can share a link with Caroline for this ACA report. It is, I don't believe that you have to be a member. We are part of ACA member, but I don't believe that to access this report, you have to be a member. So it should be available. You just require only your email address. And I encourage you to look at it. It also talks a lot about which was not the focus of today's conversation, but it also talks about generally where the industry is going in terms of the valuation, in terms of investment size, note versus equity, and all those other things. And I encourage you to look at it. So that was about the COVID overall. So that also meant that it impacted the launch place. And again, like everybody else, early April, there was a lot of jitters. Even for the launch place, we had to rethink about our investment strategy moving forward during that time, and also moving forward. So we decided that early April, end of March, early April, our focus is going to be portfolio companies. Those are the companies that we have already invested in. That became the focus. We want to make sure that they survive the pandemic. There was some, initially there was PPP loan available for most of the businesses. There were some concerns if the venture-backed companies can get those loans or not. So a lot was going on. Our focus at that point, especially, shifted to portfolio companies, just making sure that they survive. And um, uh, to do that, we launched a loan program to help our existing portfolio companies. Again, this was only for our portfolio companies. This is not that we heavily advertise outside, but if you are a portfolio companies, we decided, hey, you know, uh, if you're not able, if the sentiments were not good among investors and they were holding their capital, and if they were planning on raising a round and they needed something in between, we launched a loan program where we can lend a loan for up to $150,000 for a very small. I'll just tell you, like 2% interest rate, just to meet our um, closing costs. This was not to make money during pandemic, but just to help our portfolio companies and infuse some capital. We also change our investment thesis that time to evaluate companies that were addressing societal change during COVID. So we took a pause on anything that we were looking at, and we will only consider, and this we still consider, we will for temporary. In April, it was like for almost 120 days, but we still like give this to preference to companies that are addressing societal change, meaning addressing COVID, or if it is education technology that is helping, learning during COVID, or if it is, telemedicine, things like that. And those are the industries, overall, like they have survived during, they have done very well. And, unfortunately, I don't want to say at the expense of COVID, but, because of the changes, if you had a platform like that you did okay. So that became our. We were focusing on that, but again, that doesn't mean if you are just doing that. We also, all our other criteria to evaluating deals, they still remain the same. The fundamentals still had to be strong. If it was no COVID, we want to make sure that you still can perform well and return capital back to investors. The Big Launch Challenge, I talked a little bit about it this year. We switched from Big Launch Challenge. We called it Big Launch Challenge Lite. Um, uh, Not a marketing here, you can tell. Basically, what we did was this is a signature event for us where we like to meet a lot of entrepreneurs. This increases the deal flow for us. This helps us connect with a lot of entrepreneurs, investors. But since it was online, we had to modify, and we decided that we are not going to have a prize money associated, but we were able to get some very strong investor panel and judges, and they represent some of the most active funds, highly recognized people in the industry. So again, we think one of the most important thing for entrepreneurs at this stage is, yes, non-diluted capital from winning the competition is very important, but at the same time, getting expertise from investor, their perspective, in connection to them is as important as in the winnings from the competition. So we still are going. We had to cancel our Idea Fest, but we are moving forward with Big Launch Challenge. But it will be there is a little modification. Overall, I will say that we are open for business. We are evaluating new technologies, though focus is a little bit on addressing those companies that are addressing those societal changes. But if you have strong fundamentals, if there was no COVID, then we will still consider your application. So we are open for business. If there's a great opportunity, we would like to know. We would like to know more about them. We would like to know more about the founders, and encourage them to apply to our funds. So that was the second piece of today. Any other questions related to impact of COVID, about the shift in launch place, our investment thesis? And I do want to mention that if we are looking at companies who are addressing the societal changes, if they are addressing these directly, then we can consider waiving off that impact requirement if they directly address these societal changes. So there is a possibility of waiving that requirement that the company create an impact. But again, we don't want to use that an excuse. We still like to see companies that can create an impact in our region. But if they're addressing those societal changes directly and can have impact in our region because of things that they are addressing, then we will consider waiving off that requirement. Questions?
I'm not seeing any questions, Varun. Again, if anybody has any questions, please do put them in the chat box or feel free to unmute yourself if you feel comfortable.
Okay. All right. So I've put together this about like how you can connect with investors during this pandemic. And this is again like some of it is coming from me personally. I think, and what I think is, though you cannot meet a lot of companies and entrepreneurs in person, the basics of it remains the same. There's no change in that. I feel like you still have to start early. Sorry, there was a question, so I'll try to answer that. You still have to start early. Raising capital does take time. Generally takes time, so start as early as possible. The best way to connect, I would say, with investors is usually again, word of mouth is the best. For us, since we started doing investments, we have looked at over 700-800 deals. But the companies, the 20 portfolio companies that we have, is most of them, they came from our syndicate partners, or they came through our accelerator programs that we are part of, or we regularly visit, or participate in, like Riot, and through our board members, through our advisory board committees, or through our portfolio company CEO. So I think, like any other business, referral, word of mouth is very important, and I think it is important even during pandemic. You get connected through a referral. We do have a portal, so we are on two portals, like I said, Procedure, where companies can apply directly, and August, which is kind of a matchmaking platform for investors and entrepreneurs. But again, we review them on a regular basis, evaluate the companies there. But most of the strong companies we have seen, they come through our syndicate partners or other partners. The other thing I will say is, continue to focus and learn about your investor partners and understand their investment thesis if you are a good fit for them or not. I also think that you need to focus on your product market fit. Make sure you have done early customer discovery, and if those, again, fundamentals are strong, you will get attention from investors. Again, that's my personal thing. I mentioned about this email list. Again, this is again personal. A lot of investors, they may not like it. I'm okay with that. A lot of companies, they ask, or they have asked me if it is okay if they can add me to their investor list or newsletter. I'm okay with that. A lot of investors, they don't like it. They seem that maybe too much, or it regular emails, they may not like that. But I'm okay. I want to see what if. But I would suggest that you talk to them before and ask them to add it. If I know about a company, I heard about them, and I'm on the list, then I usually go through, have a quick scan about like, hey, what they're doing since we last talked, what are the updates. And if there are a few milestones that we talked about, or I had in mind, or we were considering, and if they have checked those boxes, and then I think that it can get investors' attention, and you can begin the conversation. So I think for me personally, it is okay, but I suggest you always, ask the investor how they feel about it, because you don't want to, act like, hey, you're pushing, sending too many emails. Um, and um, last slide I have is here is getting connected to investors, how to be prepared. Again, this is very, very high level. Um, I I would say, like, use that virtual interaction on things like webinars, on panel discussion if you are participating, to get like a one-on-one meeting. um, and if you met somebody through, for example, like conversation like this, or lunch and learn, or like a panel discussion you were part of, always shoot an email if you are interested in learning more about that fund or investors and their investment thesis, and want to introduce your company to them. Just leverage that virtual interaction into like an online one-on-one meeting. Maybe send a LinkedIn message. The other thing I would say is, invest in basic technology. With If we are focusing a lot on these online meetings, getting a good like audio system or like earphones, I think that will be a good investment at this stage. Especially since there's not a lot of one-on-one meetings, and you're saving time on driving around, taking meetings. So I would say that you can use that money to invest in technology. Have a clear, again, this goes back still to basics. Have a clear message about your company, and what you're trying to do and how you are addressing a problem, and communicate that with investor. And the last thing is, like, sometimes you got to improvise. This is interesting. I put this here because I've seen some of the early stage companies, their founders and CEO, they all try to do interesting things. One of the latest one that I saw was, which I'm sure others have seen it, but I have not. Doing a product demo, okay, online, which is okay. Like, if you are a software company, you do that all the time. But last week, 2 weeks ago, we had a company that presented to us, and they did like a hardware demo for their which through their lab. So it is a cell separation technology, and they did it through the lab, which was interesting because somebody had to hold a camera, and the other person was just filming them. So it was done. It did take them a little bit extra time, but they did a very good job about presenting and showing the product and the demo and how it works. So I thought it was kind of cool. They were still able to do it because they were restricted on their end, how many people can be in the lab, but they still managed to do that. The the other one I recently saw was, you will see a lot of times, like Big Launch Challenge or other organization, they host these, highlighting early stage companies. I saw one of them, they just put their deal room on their presentation, link to their deal room. This company did. So if anybody is interested, you have the information about them. I don't know how their legal team or lawyers will feel about it, but I thought that was kind of unique. Like, they were so transparent and okay with sharing their information about their company to everybody, since they were meeting investors from everywhere. And on that, at least on that event, there were a lot of investors on that, and they just threw their deal room there. So if anybody's interested, they can uh, look at the company. So again, how to connect? I would say the basics still remains the same, and um, though though a lot of investors may not be looking at companies because of COVID, we are a managed fund. We have committed capital, so we are open for business. We are looking at new technologies. Again, the fundamentals have to be strong. all other things have to be in places. And yes, if you have any questions, I'm here. My email address is listed there. Please feel to reach out. Again, we like companies that are in IoT space, and happy to have like an introductory call, just to let you know more about the launch place, but also understand what you all trying to do. So thank you. That's from my end.
Thank you so much, Varun. And again, I do encourage you to reach out to Varun if you have any questions. Varun and the Launch Places is an extremely great resource to our community. So thanks again for being here, Varun. We do have a question here from Zadie, who I just have to point out is in the current Ride Accelerator program. Hey, Zadie. Zadie wants to know, and excuse me, my dog's barking in the background, what is the average equity stake percentage that the fund requires?
So that's interesting. So it all depends on, the typical is for angel and seed round, like sometime you will hear about, I would say goes depending on the company, 15 to 25%, comes out to be 20% average. Again, it goes back to what is the industry and the company itself. What you're doing in the valuation of the company. For us, that's what we look for. But the pre-seed, sometimes we are the only investor in, and if it is a pre-seed, then it is a note. So of course, we do have a cap on the note, but you are kind of kicking the conversation about the valuation for a later date. And
very helpful.
If you can share more, like maybe we can have a one-on-one, and I can tell you a little bit more. Then depending on the industry, I'm sorry, I do not know about your company, but we can tell you. We also consider like comps, right? Recent deals that we have done, also the industry. I will also say one of the most important thing is the area and the region that you are in, to consider that, because sometimes the valuation conversation is difficult, but it has to happen. And as investor, we sometimes hear that company goes through an accelerator program, and I don't want to throw anybody under the bus, but sometimes company attends accelerator program in on West Coast. They see some deals happening there, and they try to bring those here, but they may not align with the investors in this region, because especially early on, investors, angel investors and seed investors, you focus a lot on the giving back to the community, helping the company, and not just purely return. So the alignment is not there between the interests of the company and the angel investor, and the valuation are a little bit different in Southeast versus say Silicon Valley or like Austin or other areas.
Very helpful. Thanks so much, Varun. We do have a couple minutes left. If you have any questions, please put them in the chat box or feel free to unmute yourself.
Cannot be that there are no questions. I cannot be that clear.
Your presentation was that amazing, Varun.
But I do encourage you to contact me here at the email address listed below. If you have any specific questions, if we don't know about your company, again, like I said, we like to get started on this early. It does take time sometime to just build a reputation. We want to work with the entrepreneur, with the founder, and it's a partnership. It's a long-term partnership, and we do want to start that early, as early as we can.
Thanks, Varun. We do have a question here from Griffin. What level of traction do you expect an applicant for the seed fund have over an applicant for the pre-seed fund?
Yeah, Very good question. So I would say we have seen companies pre-seed is a lot of time we will say that they are pre-revenue, right? And when we say traction, and I will share some examples. Um, Sometime like they will have a pilot, or they will need like money for for pilot, and so they may not have like a subscription based revenue. They may be like just a pilot. For C stage company, again, um, when you're applying, when we are looking at deals, we do have a funnel. We are also comparing, right? Like with the other opportunities that we see. For seed fund, we have seen companies that are further along lately because it has been very competitive. When I say lately, like in the last year or so, we have seen the companies that have, a year before they may have like a revenue of up to $1.5 million. So they are further along, but they may be raising a larger round, which we syndicate. But for pre-seed, we have seen in terms of traction, sometimes they will have a MVP that they can get like a pilot, but they may not have like if it is a hardware, they may not have a hardware that is ready to be commercialized, but it is something that you can do pilots for. In other cases, for example, we invested in a company that required $25,000. This is a few years back. And we invested in a company because they needed a third-party validation study, and our investment was going to go directly towards that because it was very clear. It is not going to be very important to them, but it was also going to be very important to us because that gives us more confidence that if the third party validation comes out to be positive, and then we will be more confident in investing even more. For them, it also helped them with the marketing in future. To do other pilots that they have done these XYZ thing. It has been validated by a third party. So again, it depends on the industry. You probably will laugh that the answer is always it depends, but for pre-seed, most of the we have seen companies that have a we pre-revenue, but for seed lately, I would say we do have companies with have a version of their product out in the market. They do have revenue. It's just because the nature, lately it has been very competitive market.
Thanks, Varun. We've had a few more questions come in. The first one here is, when will the Big Launch Challenge Lite companies be announced?
Um, Very specific question. Yes. So we closed the application. I think it was closed. Don't quote me. I'm sorry. Was it on Sunday or Monday? It was closed. In 2 weeks, we will evaluating all of them. I think we will have them announced like next week.
Thanks, Varun. The next question here is, with the decline of early stage investment activity, have you seen a change in companies' tactics to get to growth phase more quickly or efficiently?
Um, so I would say I want to be clear. Um, it did decline in Q2 based on the PitchBook data that we saw. I do feel like the confidence the investor have based on that other study, ACA, which was also recent, they are interested. They are looking for more investment. So we are also members, though we manage our own fund. We are also members of RTB Capital and Venture South. This is just to syndicate and look at more deals. And what we are seeing is the confidence among investors is there, and they are looking at new technologies. So yes, we saw early on 2000, Q2 and Q3 there was a decline, but I feel like the investment is going to continue. In terms of tactics, what I've been seeing is there has been a lot of focus on the product and validation. We have a company that unfortunately it happened. They were in queue right then it happened. We were finishing our diligence, and we had to pause because our investment strategy shifted. And it happened, unfortunately for them. It happened with other investors as well. So what they did was they shifted a little bit to raising capital to bootstrapping with I think they ended up getting like one investors and using that money to launch the product, which was not like in their case, they had to do a lot of things manually, and it was not like the infrastructure was not like all technology enabled. And that is the goal that they were going to do with our investment. But just to get the product out, they use that and just getting market validation. So a lot of companies, they focus early um, um, on product and also customer validation in terms, if even if it is a discovery, customer discovery, if you are a pre-seed company.
Thanks, Varun. Tim here wants to know if you can please clarify the location of your investment region. Tim is located in Orange County, west of Raleigh.
Yeah, good question, Tim. So when we say impact requirement, our region is again Danville, Virginia, Pittsylvania County, Virginia, and Caswell County, North Carolina. With that said, I want to be very clear. When we are looking at companies, they can be located, and we have invested in companies in Northern Virginia, RTP. But once we make an investment decision, they can continue to maintain their headquarters, or like if they have a technology that requires expertise from they need to have something near Duke because of health expertise. We encourage that. But if for our requirement, the company just have to create a minimum of 5 jobs over a period of 3 years in those 3 locations. And if your product or your services, the company is trying to address any of those solution that is impacting COVID-related societal changes, then that can be we can waive that. But again, it has to be directly related to COVID. But to answer your question, if you have no intent to have impact in our region in future, then you may not be a good fit. I clearly tell entrepreneurs early on, we want to help entrepreneurs. We try to be very, very transparent with companies. And if it is not a good fit, then it is not a good fit. We don't want to create something that comes as a hurdle for the company or for us. So if it is not a good fit, then we will let you know early on. But impact wise, we have seen companies, and they are in manufacturing. They can have distribution and logistics in our region, back office, account management, and we do have some software as well. So back office could be a good thing to do in our region. So yeah.
Perfect. Thanks so much, Varun. And just a lot of comments here on how your answers were very helpful and wonderful presentation. So that is all the questions that I am seeing. If you think of any questions after this, again, please reach out to Varun directly at vsadana@thelaunchplace.org. This presentation will be shared on Riot's meetup page as well as the recording. Thank you so much, Varun, for being here. Really appreciate your time.
Yeah, and Caroline, I appreciated the opportunity, and please feel free to reach out to me. I may not respond immediately, but I try to reach out and connect with most of the companies. And if you have any questions, and just shoot me an email, and maybe we can have a one-on-one conversation. And I hope you all enjoy the presentation and you all stay safe and healthy. Thank you.
Thanks, Varun. Same to you. Take care.